Halo, selamat siang teman-teman. Perkenalkan, nama saya Dominic Cokrosetio, salah satu Business Development Associate dari tim Business Development saya Kaya. Dan hari ini untuk IG Live Session Fun Friday, kita ada acara yang sangat menarik. Kita akan bicara tentang market outlook ekonomi menjelang dan setelah pemilu 2024. Nah, hari ini kita ada kolaborasi dengan salah satu investment analyst dengan Mas Fabian Himawan dari KISI Asset Management. Jadi sekarang kita mau invite dia ya.
Hi.
Is this live?
Yes, we're
Hi,
live.
hi everyone. Good to see you here. I hope everyone's having a wonderful afternoon.
Hi, nice to meet
Hello,
you.
bro. Ilham. Nice to meet you,
Good.
man.
How are you? Nice to meet you, Fabian. How are you today? Hello, can you hear me?
Okay. It seems to me I can't really hear from my end.
Can you hear me now, Fabian?
Hello?
Hello?
Hello? Okay, sounds good then.
All right, sounds good, yeah. All right, nice to meet you. So I think today for our friends and our viewers who may not know, could you first tell us what kind of company KC Asset Management is?
Yeah, absolutely. So KISI Asset Management is a professional investment manager based in Jakarta, Indonesia. But we are actually headquartered in Seoul, given we are a subsidiary of parent company Korea Investment Management. And other than that, as an asset manager, we provide multiple products in different asset classes, including equity, fixed income, money market, and hopefully soon alternatives.
It's very interesting. So yes, for our friends who may not know, KISI is asset management firm, is one of our partners. They actually have a team of investment managers who actually manages our funds inside Kaya and strategically places them in various financial instruments based on our risk appetite. So for the second question, could you maybe tell us more about maybe what the market outlook may look like for the start of 2024 and for the next years to come as well?
So our outlook in the general regional market is relatively upbeat in 2024, based on the fact that upward global interest rate pressures is likely to subside soon. The Fed has indicated at least two rate cuts this year based on the most recent Fed dot plot, which is a positive indicator for markets not only in Indonesia, but we believe globally. But however, in terms of when this rate cut will be, this is open to debate, but a second half prediction of 2024 is pretty conservative in my books. Of course, we still want to remain vigilant on the election results, domestic election results, as well as international election results like political campaigns in the US, as well as domestic macroeconomic data.
I see. And maybe could you tell us, Fabian, about like maybe which sectors do you think might have an influence or a positive impact in 2024?
Absolutely. So I think we believe that given the rate cut prediction, there is interest in the general banking sector, with the possibility of digital banks being a tactical play. Furthermore, tech may be on center stage for a run due to their recent lackluster stock performance. Other than that, I believe our investment team believes that metals may be interesting as well, given the resurgence of the Chinese economy, as we believe that Chinese demand has more or less kind of bottomed out from historical evidence, and the low base will now come into play.
I see. And maybe with more of like a focus on maybe downstream efforts from, the new presidential election, do you think that maybe other commodities might also face some positive impact regarding this?
In regards to other commodities, it's more, maybe I wouldn't say much in terms of the election, maybe in terms of global demand, with China coming back up. Other commodities may include, like, for example, nickel. if the Chinese property sector can pick up pace back again. As you know, China is a big manufacturer for stainless steel that encompasses the utilization of nickel, which is imported a lot from our country. So our industry can also, like, I guess, benefit from that if the Chinese property sector gets relived again.
I see. Well, that's really interesting. Thank you for your explanation, Fabian.
Yes.
And for our viewers here, we'll also be talking about the KISI Balance Fund as well. And so I think many of us would probably like to know as well. So in your opinion, what is the strategy of a balance fund, and maybe like what are the types of securities that may be included in KISI Balance Fund as well? Could you maybe provide an explanation for the viewers?
Yeah, absolutely. So the balance fund, as the name suggests, is a fund that is in between our equity fund as well as our fixed income fund. For those of you who feel that equity is a little bit too high risk for your risk appetite, for example, not being able to stomach, like, let's say, a 12% drop in a single year based on macroeconomic indicators, maybe you want to be invested in more of a balanced fund, because we have allocations in the balance fund that is towards both equity as well as fixed income, so you kind of get the best of both worlds. And the main rationale for a balanced fund like this is we believe that the two asset classes, both equity and fixed income, have a correlation of less than 1. What I mean by that is if equity markets go up by a certain percentage, fixed income markets might not go up by the same exact percentage, or exactly what it indicates, correlation. So for those of you who may be interested in buying a product that is not as risky as equity, but at the same time yield higher than fixed income, because you believe, let's say, fixed income is not appropriate given your risk appetite, you seek something a little bit more high return, I believe, or we believe, that the balance fund is a good choice for you.
I see. Well, that's extremely insightful. If you look at the historical performance of the KISI Balance Fund, what does it look like?
Yeah. So based off December, the KISI Balance Fund is performing very well. Year to date in 2023 alone, excluding the first half of this month, I guess, the KISI Balance Fund is up 10.6%. 1 month of December, we are up 5.33. 3 months of 4.9. 6 months of 13%.
I see. That sounds pretty good. And with the presidential election coming up, the market state of Indonesia is maybe expected to maybe experience some volatility.
Yeah.
So what is KISI Balance Fund's take on this for this year and maybe for the next years to come? Like, what do you expect it to look like?
Yeah. So again, the performance of the balance fund by design is expected to be in between fixed income as well as equity, because there's a portion that's allocated to fixed income as well as a portion allocated to equity. Hence, let's say that the markets yield a very good year next year. A lot of sell-side houses predict a upward price increase of the JCI between 5 to 8%, let's say. Well, fixed income, let's say, hypothetically yields between 5 to 6%. The balance fund is expected to perform in between those numbers. So fixed income of 5 to 6% and equity of, let's say, 78, it'll yield somewhere along the lines of 6.5%-ish. Because by design, you will not yield fund returns is higher than a pure equity fund, or fund returns lower than a pure fixed income fund. So you're kind of getting the best of both worlds.
I see. And for like the asset allocation strategy of KISI Asset Management, why have our friends at KISI Management decided to distribute its allocation that specific way and the KISI Balance Fund?
Yeah. So is the question more of like, how do you decide the allocation?
Yes, like how do you construct like the portfolio and the allocation itself?
So what I can tell you is that we want to offer investors the right mix of fixed income as well as equity in our balance fund. So in other words, our strategic asset allocation, for those of you who don't know what that means, it's basically like a long-term like weighting of our fund that we believe can yield investors a good return, is optimized in a way to ensure that investors yield a maximum amount of return Now get this, based on a specific risk spectrum. So in any investment, it's not always about the absolute returns. It's about how much returns we can squeeze out of a specific risk spectrum, right? So for those of you interested of how we decide the allocations of the fixed income as well as equity portions of our balanced fund, it is simply based on the modern portfolio theory, efficient frontier theory. So if those of you who are interested in looking a little bit further on what that is, just please, by all means, go to investigate and search the modern portfolio theory. And under that, it's going to be something called the efficient frontier, which basically weights risk and return on a spectrum. So for a given perceived amount of risk, you can only return this much in terms of your investment performance based off financial, I guess, theory.
Right. So it's just mostly like projections on return based on the theories itself.
That's correct.
And yeah. And what sort of investors do you feel are probably more suited to invest in this specific KISI balance fund? And how long do you think they should probably hold their investments for?
That's a good question. That's a good question that I feel like not many people ask enough. So the answer to this question simply depends on one's investment horizon. Again, I don't know, let's say person A, person B, person C, all might have different investment horizons, as well as risk tolerances. I want to emphasize the fact on risk tolerances as well. As mentioned previously, by design, this product is meant for people who are, well, see equity as too risky, but fixed income as not that enticing enough, maybe a little bit too conservative. So if one doesn't really understand what their investment horizon is, it might be 1 year, 2 years, 3 years, 5 years, 10 years, until retirement, in any case, I would just say hold on to it as long as possible. Why? So the purpose of the fund is to generate stable long-term returns anyway. So being in the market, well, time in the market, again, is better than timing the market for those of you who are interested in more of a long-term approach to your investments. Hence, if that idea of a very long-term horizon is within your ballpark of investing goals, I'd say the balanced fund is a good choice for you guys. Again, it's investing in this kind of fund is a very long-term approach. So please decide what your investment horizon is. My guess is for the majority of retail investors, their goals are very long-term. So it doesn't really matter when you entry or exit out of the fund. By design, the fund is basically allowing you to reach your financial goals if your goal is accumulating wealth by the time you retire. That's my take.
Right. And do you also see yourself as more of a long-term or short-term investor?
Yeah, absolutely long-term. I'm a very long-term guy. I don't really have the time to nitpick my way in terms of finding individual mispriced securities. Very portfolio approach in the way I invest myself.
I see. And maybe for our viewers as well, they can probably implement something with dollar cost averaging as well for like long-term investments.
Absolutely.
Probably, yeah, weigh out like the risk as well, right?
Yeah. Absolutely.
All right. And for like a final question for this, do you probably have any tips for our viewers watching? Maybe if you want to invest in like mutual funds, like perhaps like as a beginner or something, like what would you think they should probably do like to start off, perhaps?
Okay, understood. So there are 3 pillars that I live by, the way how I invest. I can share that a little bit with you guys. So the number one thing I would like to say is understand why you invest. Emphasis on the why. Is it to support your retirement lifestyle? Is it perhaps to fund a future big purchase? Understand why you invest. Because if you're in investing just for the sake of, I want to see my portfolio go up in terms of value, what is your end goal realistically, right? So understand why you invest. For the most of the majority of retail investors, it's probably going to be to support your retirement lifestyle or to fund a future big purchase, whether it may be a house, a car, whatever it may be. But understand why you invest. The second thing is, how much can you invest, right? Be realistic with how much you can set aside after paying your bills. Your bills are more important in the short term than your investments. Trust me on this. If you have credit card bills, pay the credit card bills off, and whatever you have left, invest it. That's my second thing. Now, the third thing, and arguably something that is very, I believe, very prevalent and very applicable to the audience today here is understand what you're invested in. Not just why you invest, how much can you invest, but also what you're invested in. Don't invest into things just because your friend told you to. Like, for example, your friend, based off another testimony from another friend, tells you to invest in X, right? What is your friend's, I don't know, investment philosophy?
Yeah.
If your friend says it's from another friend, well, can you come into conflict with that guy? Most likely that person probably heard it from someone else, right?
Right.
So understand what you're invested in, whether it be a mutual fund, a stock, fixed income securities, I don't know, for maybe the more sophisticated investor here, derivatives or alts, understand what you're investing in. Because after all, it is your money, right? It's not your friend's money. So please understand what you're invested in. So again, I'm just going to highlight those three things again. Understand why you invest. Be realistic with how much you can invest every time, especially if you're, working a corporate job. And number three is understand what you're invested in. So I think those are the three things that I like to share with my friends here today, joining me in this Instagram live.
Right. And I think to add on to that, I think probably the most important thing is also to do your homework, right? Like actually do your research before you invest in a certain security, whether it be like a stock or whatever. Because I think from my experience myself, I only invest in probably securities or like perhaps like stocks that I actually believe in, because that way you can also hold it like long term, right? So like if the market does, end up becoming volatile, and you won't be like sort of coerced or influenced to like sell it quickly. Yeah. So that's probably like another thing. And I think that what you said for the pillars were extremely wise advice for the viewers as well. So yeah, again, like just do your homework, right? And make sure you understand what you're investing in.
Yeah, just a little, maybe say a little bit more about your homework. The thing is, like, I understand a lot of the retail investors don't really have access to tools a lot of the institutional investors have, whether it be, most likely the case is probably going to be Bloomberg. So for those of you, again, understand why you invest, right? If you're investing because you're investing for the long term, is it worth it for you to do a lot of swing trading in the short term? Because there could be one blowout position that basically gives you earnings for the year or something like that. So if I was a person that doesn't have access to, like, for example, like data sites, like Bloomberg, FactSet, whatever it may be, I'd probably be more comfortable putting my money in the hands of a money manager that knows exactly what they're doing, because they have the data, they have the tools. It's before I joined this industry, the world of investment management, I was also like subject to a lot of bias in terms of like belief that I can outperform all managers. But just because I just don't have the data at my disposal, it makes things infinitely harder, because the reach of data and the speed of data that comes back to you as a fund manager is crucial to your success.
Yes, exactly. And with the tools you guys have, it's more of like a real-time data as well, which obviously retail investors do not have access to.
Yeah.
So again, I also agree that it's probably better, especially for those who do not perhaps understand it, to actually do put their investments into investment managers. Is there probably anything else maybe that can be perhaps could you also probably tell us about how do you see perhaps in terms of the geopolitical factor, how they actually affect the performance of the KISI Balance Fund performance in 2024?
Geopolitical factors as in domestic geopolitical factors or international geopolitical factors?
Probably can do both, perhaps the domestic first.
Okay. So I would say in terms of a geopolitical factor, I would say international is more prevalent as we speak. More specifically towards the equity side of the fund, as opposed to the fixed income side. So geopolitical factors, meaning like the tensions in the Hamas-Israel war, as well as
Mm-hmm.
the Russia-Ukraine war. The only thing that is probably of concern to a equity investor invested in our balance fund is that war requires oil, right?
Yeah.
And if there's a possibility for a full invasion in the Israel-Hamas war, this could actually potentially spike oil to prices that we have seen in the past, like $90 a barrel, even $100 a barrel. And this could generally influence a lot of companies who use oil in terms of their day-to-day operations. Let's say a coal mine. Well, look, in order for coal miners to operate their fixed assets, they need oil. It's going to increase their costs and eat into their top line. So that's something that we probably need to watch out for heading into this year, and how geopolitical tensions can unfold to a level where it can increase oil prices, and henceforth the bottom line affect the bottom line of domestic companies within the balance.
I see. And maybe for the KISI Balance Fund itself, for what sector do you think is like it's more towards like overweight or underweight in?
Yeah. So in terms of sectors, what we like is we like tech, we like
Mm-hmm.
banking, we like metals.
I see. And
Simply
is there
just
probably
based on the fact that previously I mentioned that banking and tech is more from the interest rate side, the global interest rate fluctuations. We're hoping that's going to level off by H2 and probably a rate cut by H2. And from the metal side, it's more of like Chinese demand picking back up based off their property sector.
I see. And could you also probably tell us about like probably what is KC Balance Fund more invested towards in for this asset allocation for 2024?
Asset allocation for 2024, that I cannot tell you. That is trade secret. Because if I do tell you,
Right.
then basically you can just replicate that yourselves.
Yeah.
But
Okay.
we are more bullish on equity. Yeah, we are starting to increase our equity portion and
Right.
most of our balance. Yeah.
Okay. And
What I can recommend, what you can do with that information is based off our latest fund fact sheet. You can kind of see like what our holdings is as of December, and just imagine that we're allocating a little bit more to equities just because we're a little bit more bullish on this year.
right. And we also see that for the potential for the Fed rate holding out due to the potentially rising inflation, what will KC do in regards to fund rebalancing in regards to this?
Sir, can you repeat that question one more time?
Right. Because since we see that there's a potential for the Fed rate holding out due to potentially rising inflation, what will KC do in regards to this fund rebalancing?
Okay. So in terms of policy rebalancing, I think it's more towards how we're going to structure our strategic asset allocation this year if we don't see a rate cut. Is that was your question, right?
Mm-hmm.
Yeah. So if we don't see a rate cut, well, the thing is, again, as far as going back to 2023 again, we have to see where bond yields move. Because the thing is, like, bond yields do move with the central bank rates, but to what extent we don't exactly know. So we kind of have to wait and see. In terms of equity markets, well, it's probably going to be negative sentiment, right? Because as of my knowledge, in January as well as December, specifically had a bull run that was fueled by mostly sentiment by the Fed that they were going to actually cut rates twice in 2024. So in terms of if the Fed doesn't cut their rates next year, we'll just kind of have to wait and see in terms of bonds. But in terms of equity, it's negative sentiment. So we'll probably dive into more defensive sectors like consumer.
Right. And in relation to the previous question as well, so is KISI a balanced fund? Is it actively tilting fund?
Actively managed?
Is it an actively tilting fund?
A tilting fund in terms of style, or what were you referring to?
More towards, yes, like tilting itself, like, to like balancing,
So,
yes, actively rebalancing, sorry.
yeah, in terms of a specific style, the fund itself doesn't have a style in terms of like, I'll say growth equity or value equity, if that was your question.
Yeah.
We are discretionary in choosing the the positions that we have in our fund, and our universe is based off a universe that we have in house. But in terms of style, we do not have a style in terms of like if it's only growth company, if it's only value. We don't have that.
I see. And in the interest rate cut environment, is it also good, do you think, to hold a KISI balance fund due to the rising price for bonds?
Sorry, what was that?
In the interest rate cut environment, do you think it's also good to hold the KISI balance fund due to the rising prices for bonds?
During in a potential scenario where bonds go up in price, is it a good idea to hold the balance fund?
Yeah.
Yeah, of course. If anything, it gives you exposure to this this bullish bond sentiment, right? If you are fully invested in the equity markets, well, you still can benefit off the the fall interest rates just because valuations get better for equity positions. But if you want a specific allocation exposure to bonds, of course, it's definitely a good idea.
See. So that's probably, I think, most of the questions I have for you. Maybe we can probably see from the audience if there are any questions that they might have.
Yeah, absolutely.
Well, it seems that there probably aren't any. So probably I think it's safe for us to probably close at this point. And just like to thank you so much for your time, Mas Fabian, for joining us for this lovely evening. And
thank you, everyone.
Yeah, and perhaps I think I'll have to also point out to the audience as well that obviously with investments, mostly it's based on the risk appetite as well. And maybe is there anything else that you probably would like to add yourself for the audience before we closed?
Not really, I think.
Yeah, that's probably it from you, right? Okay, so I think just generally as well, I think it's probably good to remind everybody that with investments, there are also risks attached to it. And then again, it's like what you said earlier with their risk appetite and the risk horizon, whether it be like long-term or short-term, everyone should probably also have a goal in investing. And yeah, I guess that everybody for sure learned a lot from our session here today, especially from you, Mas Fabian. So thank you so much for your time.
Thank you so much, Alan. Have a good rest of your day.
All right, thank you.
Yep, see you.
Bye.